Welcome to the March 20th, 2020 video version of the Wagner Daily. My name is Rick Petticelli. Every Friday, this video replaces the written commentary portion of our report. Hopefully, it offers a nice change of pace as well as gives some insight as to how we analyze charts, what time frames and indicators we use. So let's get to the charts. First up is the NASDAQ Composite. And overall, I think the NASDAQ's held up really well this week, given that it got off to a horrible start with a nasty gap down and a 10% down day on Monday. And despite a few shakeout days here, the price action's been able to hold Monday's low. So we go from setting the low, undercutting the low, and now bouncing off the low, which is a positive sign. Also, we'd like to add that the 5-day MA has basically caught up to the price action and has flattened out, which means the 5-day MA would be below the price action as support rather than rallying from 10% below the 5-day MA. It has to waste so much energy just to overtake the 5 MA. In this scenario, it's already at the 5-day MA and has been in chop mode for a few days, so it could waste its energy on moving higher through the moving average. And at this point, we wouldn't be surprised if the NASDAQ could bounce, say, to the 20-day EMA or even possibly the 200. So that's about anywhere from a 10 to 15% bounce. On the S&P 500, we have basically the same type of price action, though a little bit weaker today, but we have the nasty gap down and lower low on 316, followed by the shakeout below the low on 318, which led to a bullish reversal candle, which we're counting as day one of a rally attempt, and today's action, which is a failed attempt to move above the prior day's reversal high, but the price still closed above the low of 316, so here's the support area. So it's looking pretty good. This reversal candle is still intact, and there's also a possibility that the market will not be able to move higher from here, and a break of the reversal candle low would suggest further downside. However, if the S&P holds up, we could see a move to the 20 or 200 AMA, so about a 12 to possibly 20% rally. And that's how volatile the market is right now. Is a 20% rally wouldn't necessarily put in a bottom. That's really just crazy when you think about it. The reason why is if you go back here off the lows in 2019, say we're to take a percent move from the low, we don't even see a 20% move up for the first several weeks. So that just speaks as to how volatile market conditions are right now. And since there are no open positions currently in the model portfolio, we are 100% in cash. We're going to run through a bunch of charts, some of the more popular NASDAQ charts, maybe a few stocks that are showing strength on our watch list, as well as look at a few that have recently blown up to give you an idea of what we're looking for, good and bad. So we sorted this list by what is up the most over the past 65 days of trading. We have GSX at the top, just a ton of relative strength, probably the nicest looking chart in the market, one that basically ignored the entire sell-off. We can see the RS line moving to new highs on several occasions the past few weeks while the price just chops around in a pretty tight range, allowing the 50 MA to catch up. And there was a shakeout beneath the 50-day MA and the prior low that led to a strong 20% rally. If the price can clear the 3-day high, then it could have a shot of moving higher if the market is strong. The only issue with such a move is we wouldn't be really excited to own a stock that's trading at new highs as soon as the market were to sell off. ZM is another stock with a ton of strength. It's stalled at the highs. If ZM doesn't move out and chops around for a few more weeks, that would be great. However, it's shown a ton of relative strength. It's basically ignored the entire sell-off and stayed above the 20-day EMA the entire time, so that's incredible. Now, those are two of the best-looking charts in the market. As soon as we move lower on the list, we just see TDOC holding the 50-day MA and a ton of relative strength. Note the new high in the RS line. But what we have here is just a ton of volatility as well. We have the price action tightening up here, and then 2 weeks in a row of just really wide bars. Compare that to when it broke out above 1, 2, 3, 4, 5, 6 or something weeks of consolidation at the 10-week MA. The pattern was less than 10% wide, and now the width of the past few bars is 33%. Tesla's found some support off the 200-day MA, but at more than 60% off the 52-week high, that's just too wide of a base for us to believe that it's going to become a market leader during the next rally. That is unless this market takes several months before it can put in a significant rally, as that would give Tesla some time to build out the middle portion of its base and move higher on the right-hand side. CHWE, that's Chewy Retail. Nice break of this downtrend line. And then over a few weeks of highs. Well, the breakout stalled today, but it's a nice surge off the lows. This is a stock that's showing a great deal of relative strength. But again, the volatility is just extreme right now, and we'd like the price action to settle down for 4 to 5 weeks. Amazon held on to a big support level last week and looks like it stalled at the 50 MA, which is fine. What we'd really like to see is just for this giant to hold on to the 1700 level and fill out its base with a few months of chop. DocU also pretty good strength, holding above the 200 AMA. Relative strength line already moving to new highs. But again, we note the pickup in volatility on the right side. This is DocU prior to the market selling off. Pretty tight price action. And this is DocU afterwards. A 30% pullback. In the past 2 weeks, we have 20% wide bars. AMD actually looks pretty good and has pulled back into the 200-day MA. And I think this is the left side of the pattern, so we look for the price to form higher lows from here and work on the middle portion of the pattern and eventually fill out the right-hand side. Apple has pulled back in to the 200-day MA, 27% pullback. I mean, anything near the 200-day MA here is just really good sign of relative strength, and it just needs several weeks of basing like other stocks. Same can be said for BABA. Shop as well. It pulled back in a bit more and lost the 200-day MA, but it is still holding above support. And the last chart here is PayPal. And here we have a solid base. Let's go to the weekly chart. Now we have that middle portion and then the right-hand side here, and then we have the breakdown. Now this chart is something I wouldn't have on a watch list. Most of the stronger stocks in the market have held above the 200-day MA. This stock sliced through the 200-day MA and fell another 20%, much like the S&P 500, which is why it's not on our watch list. All right, just to recap the stock portion of the video here, GSX and ZM are two stocks that are basically the only two actionable type of setups right now. Oh, I also did forget to mention PTON. And there was a nasty shakeout beneath range lows and then a 50% bounce. And this would be more of a swing if it can clear this 2750, 2760 area. See if it can fall through to the upside, but that would just be a swing trade. That's not an official setup. And so back to the recap. So we have basically GSX and ZM as actionable stocks. For the very short-term swing trader, if the market bounces higher. Other than that, we just have a bunch of stocks that are holding up well, but that have bounced off the 200-day MA and need several weeks to repair the recent damage done from the correction. Even if the market does produce a fall-through day, it might be tough to put much money to work as there simply aren't enough bullish patterns out there right now. So our short-term outlook is for the S&P 500 and NASDAQ to potentially bounce higher if Wednesday's lows hold. And the bounce could be anywhere from 10 to 20% due to the recent volatility in the market. And then we look for stocks to stall at resistance and test recent lows. Whether or not they hold or set a new low, we don't know. That's a wrap for tonight's video. Thank you for joining me. If you'd like to learn more about our swing trading newsletter, the Wagner Daily, go ahead and click on the link below. Again, thanks for joining me and have a good night.